Thursday, November 20th, non-farm payrolls. Wow, okay. Interesting. Right, well, ladies and gents, looks like we've got a surprise that's here at the UTC. Bit of a surprise for us all, possibly a surprise for you guys out there as well who are watching us right now. The non-farm employment numbers and unemployment rate has been added at some point between me providing the market analysis report this morning and us coming on stream right now. And that's been added for Thursday afternoon at 1:30 GMT. Good afternoon, ladies and gentlemen, and welcome one and all to this afternoon's Markets Now session. The usual Monday special of the Market Analysis and Economic Impact Report breakdown. Hope you're all doing well out there, and good afternoon to all of you out there on YouTube as well. Hope you guys and girls are doing well, and looking forward to your trading weeks ahead. It's a relatively quiet week this week. We obviously have come to the end of, or what we hope is the end anyway, of the US government shutdown period after the White House administration passed the bill to end that. And that was last week. So hopefully we will be getting a influx of data from this point on. We are also owed an NFP and a CPI batch of data, which will hopefully be released in the coming weeks. This week doesn't look like it's going to be this week necessarily, but possibly in the next week. So we have got that ahead and looking forward to that, where we will obviously be trading things live as well. So if you haven't done so already, please feel free to join in the community, where we will be running those live trading events inside the general community as well. So there's no paywalls that you're going to be hit by in order to come and join in the fun. So let's get going then. This afternoon, what are we looking at? We've got, first of all, obviously we're going to be breaking down the portfolio section of the report. Then we're going to go into the market trends and opportunities, and then finishing up with the economic table as well down at the bottom to look at the fundamentals, some equity picks, and so on and so forth. The normal good stuff. And then after that, we will be breaking down the US indices, where we will look at potential trading opportunities for this afternoon heading into the week ahead. So first things first, the portfolio. What were we looking at last week? We actually ended up with a 3.85% net return last week, which is not too bad going at all. And this was predominantly down to Friday. Friday was actually the biggest day of the week for us, where we ended up with a great 2% return on the Friday. We did a really nice trading opportunity in the morning in the European Open, and then we finished it up with two really nice opportunities in the afternoon. And it was just good vibes on Friday, really good market vibes. Things were moving, things were happening, and it came at the end of a very slow and relatively frustrating week. That ultimately has been the kind of market environment that we've been trading in now for maybe up to 6 weeks, believe it or not. It's actually been that long now since things have been somewhat of a slowdown in the markets, and a lot of ranging consolidation market price action. Now, the returns last week, they were spread over Forex indices and commodities. We had 20% market exposure in commodities last week. Indices were at 53%, always leading the charge as they are. And the FX space took 27% of our total market exposure. Down into the weekly return then, Monday we had just over a 1% day. We had a drawdown day on Tuesday at 0.25% down. We had a 0.5% day on Wednesday, and we had a 0.47% day on Thursday, if memory serves. And then this was all before the Friday, where we got that really nice big 2% day, ultimately leaving us with a 3.85% realized growth. Because before that, things were very slow. We were actually only looking at maybe 1.3 to 1.5%, I think, before we had that Friday. So It really did. It really did pull it all together for us at the end of it. Um, it was pretty good. There were a lot of. I've outlined the thoughts here, but there was a lot of expected volatility. Obviously, midweek, they never really took place. But because of the government shutdown being sort of ended, if you like, that really set the Friday up for some market volatility. We got some really nice big moves. We definitely saw an increase in trading volume. And so it just all pulled it really nicely together on the Friday afternoon. So going down into the portfolio metrics then, we have had a bit of a change. We've had an increase in everything. So risk reward has gone up 0.1% to 2.9 over the total portfolio this year, which is excellent. If you are looking to become a big time desk trader on one of the trading floors in the city, you will be looking for an average of a 3.0 risk reward across your portfolio. So that's really good. We're in line with our sort of high-end commercial trading metrics, which is really great. Our monthly average return so far is at 13.1% with a weekly return at 3.3%. And our annual return so far from beginning of the year to present date is at 147.53% return, which is outstanding. Now, if we go down here into the trading volume, we did add a significant portion of longs last week. I think we added 10 longs versus 5 shorts. So we were buying into the market a lot more than selling. But because of how much we had been shorting the market before that, the shorts still have it so far. So we're at 20 shorts and 15 longs in total throughout the month of November so far. And then down into the ratios, we've got 3.85% net return in the UTCF. The S&P actually took away 3.34%, and the UK FTSE was almost on par with that as well at minus 3.28% respectively. So moving down into the market trends and opportunities this week, ladies and gents, we've got some pretty decent stuff on the cards, albeit possibly a little bit sketchy as well. I only say that because of the lack of data we've had, and the markets are still holding their breath on the NFP numbers and the CPI numbers. We still have those to come out. The markets haven't had them yet. They want to digest them. They want to break them down. So it's important. It's important to see those numbers first. The weekly stock index this week is the DAX 40, and we are looking at the possibility of this one continuing to range. We've got a really nice equal number of highs, equal number of lows, market running sideways at the moment. You can see I've outlined where I'm really looking for this one to go. So if we are long, we'll be looking to take it long to the bottom of that area in there, because this is the most highly probable point to exit this position. Although if we end up taking a short in the latter half of the week in the DAX, I do need to see liquidity achieved before this happens. If we dip down into liquidity, then we are going to be looking at buying into the DAX very quickly. And this could even potentially be ready and set up for us tomorrow. And then we'll be holding on to that one for probably the majority of the week, unless we hit stop out underneath liquidity down at the lows there. So that's a good one. Over here in the pound CAD, again, very similar situation I would expect to the German 40. We've got that equal number of highs and lows. We actually have already had a couple of really decent moves in the pound CAD that were outlined for you. So we had the dip down into liquidity here. We had the big rally back. We actually had the previous wave up and the rally down in the first place as well. So I am just literally continuing that pattern, waiting for the market to either get to the high or the low before looking at the long or the short that will come thereafter. The red circles have been outlined in here for exactly where you guys need to wait for price action to reach before you can set up your pending or limit orders and take those positions and get them live at market. Really nice risk reward across the board on this one. The risk profile's kind of medium, I would say, at the moment, out of sort of low, medium, or high risk to your accounts. I would say it's a medium, not necessarily due to the CAD too much, but probably more predominantly the pound at the moment. From an economic point of view, the pound is in a pretty rocky shape. And I mean, our country's just kind of in free fall at the moment with various different contexts taking place within. So it is a bit of a sketchy time, I think, for the pound. But look, the price action's there, the structure's there. We just have to kind of trade what we see and not what we think, and that's what I would say about that GC at the moment. Now, as we move down into UK Brent, we have a nice 4-hour channel that's formed. Some of you may call it a trend, not me personally at this stage. We're still very much within the larger daily trend, but this is just a 4-hour corrective that we're seeing here. Long term, even though I don't have the chart open, long term, UK Brent is actually in a massive falling wedge. And this is just a continuation of that. This here is the high of this latest wave in the wedge pattern. So then this is the move back down where I believe over the course of maybe the next 2 weeks, we will be ending up at the lows again before then coming back up to a high, maybe up there, and then back down, and then the wedge will be complete, and we'll be looking at either the big bullish breakout, or price action will be squeezed, and we'll get a potential bearish breakout down here. But fundamentally, it doesn't quite sit right with me at the moment to short UK Brent below liquidity here. So I probably will be putting my foot on the brake when the market gets down there in the first place. But that does mean that we have one hell of a margin from where price is currently trading right now back down there in the first place. So lots and lots of money to be made on potential shorts that we can get our teeth stuck into throughout the week. And then finally moving on to our weekly precious metal, and that's going to be gold yet again. Now, gold last week had a pretty good trading week. We didn't manage to benefit from it ourselves. We actually took a really nice position in silver instead. But it did have a good trading week. We broke up above, we came back down, nice big rejection from the highs, hit liquidity, and now it does look like it's setting us up perfectly for that big long and the trend continuation pattern. So long this week in gold, long from there to there, and then wait for the break close and the retest, and then we could potentially look at the longs thereafter. Next point of call when we get the breakout above this high is the all-time high. So that's what I'll be looking at there for the gold market. Now, as we scroll down here into market challenges this week, guys, we have, of course, the FOMC minutes. It is the highlight of the week. Now, the FOMC minutes is on the Wednesday, I want to say. Nope, tell a lie. The FOMC minutes. No. Sorry. I don't tell a lie. Sorry. FOMC minutes is on the Wednesday. And look at this. I will have to fact check this, but I think the employment data has been added. I checked the calendars this morning at 9 a.m. and it had not been added yet, but I think in that time it's been added. Let me just fact check this for a moment and go on my trading station itself and have a look, because it has Bloomberg calendar on there, which is much better than TradingView. Thursday, November 20th, non-farm payrolls. Wow. Okay. Interesting. Right. Well, ladies and gents, looks like we've got a surprise that's here at the UTC. Bit of a surprise for us all, possibly a surprise for you guys out there as well who are watching us right now. The non-farm employment numbers and unemployment rate has been added at some point between me providing the market analysis report this morning and us coming on stream right now. And that's been added for Thursday afternoon at 1:30 GMT, alongside the unemployment rate numbers as well. Doesn't look like CPI is coming out this week, so that would have been pushed back into the following week, which is fine. That makes sense because of their original release dates. So we do, in fact, have the non-farm payroll numbers on Thursday afternoon. So what I will say is we will be doing a Thursday live trading event for the non-farm payroll Thursday afternoon. So please be aware of that. Tune into it. We will be doing that one live, trading it live, setting you guys up, looking at the macros, discussing the data as it comes out in real time. And we'll be getting all that done on Thursday afternoon, as is our normal focus, our normal practice. So just a heads up right here, right now on the spot. Thursday afternoon, let's say 1 p.m. GMT is when I'll start the session. I usually start half an hour before that just to go through the numbers, and we will look at the data from there. So really good, great stuff. Very good. Yeah, very good indeed. Okay, great. So we do have the non-farm payrolls on the Thursday. And back to what I was saying, then the FOMC minute is in fact on the Wednesday evening. But of course, the highlight this week is now going to be, of course, the non-farm payrolls. But Wednesday evening, Thursday afternoon, it's going to be a pretty busy period midweek for our markets. They're going to have to go through what the chair's going to say around the Federal Reserve. They're what they're looking at, forward thoughts and stuff like that. So we've got a lot to dig into between the FOMC and the non-farm payroll. So on the Thursday morning, for those of you who are not obviously members of our trading community, this won't apply to you. You should be members. Don't know why you're not. Like I say, there's no strings attached, so please do feel free to join in. But I will be sending out the key highlights of all the FOMC minutes on the Wednesday evening on the Thursday morning. So when you log in to the trading community, you'll have it all broken down there for you. And then this will be a really good segue into this week's employment numbers, which will be out later on that day. So that's great. That's good. So moving down then to the state structure volatility index, we've got a couple of notable callouts this week. For one, pound CAD is sitting at 39.98% long, which is, in other words, a hell of a lot of commercial shorts going into pound CAD at the moment. So that's quite interesting to see that one. We also have UK Brent at 25.16% long. That's a nutty amount of commercial shorts that are currently in UK Brent. We can't say if the money's in there right now and it's live at market, or if it's in the state of pending or limit order types. But regardless of that, it's a hell of a lot of short liquidity against UK Brent at the moment. So really, really bolstering our technical bias there when we have that kind of analysis alongside the technicals. It's a sweet spot that we really want to be taking advantage of. And the third notable call out is, of course, gold. And gold's 70% long at the moment, which again is really nutty numbers. So we've got a few nutty numbers on the state structure volatility index this week, and I'm really looking forward to seeing how that pans out in terms of markets price action reaction, which is a bit of a tongue twister there, the price action reaction, but there you go. Now, moving into the economic and order book impact report. So of course, the impact scale this week is only showing FOMC minutes as of this morning, but later has obviously, we now have the NFP as well, which would be in there, probably registering as I would say a 7 out of 10, or between a 7 and a 10 out of 10 on this one. I would probably personally put it at a 7 or an 8. I don't think it would be a 9 or a 10 because of the numbers and the deviation between them. I don't think there's going to be such a significant jump in the data to cause a massive volatility strike. But nevertheless, NFP, unemployment rate, and then of course the FOMC minutes. FOMC minutes this week is registering as a 7 out of 10. So in terms of broad market impact, pretty big. Now, as we move down here into the multi-asset impact gauge, the fundamentals this week are taking up 70% of impact towards the FX space, with very, very small numbers elsewhere. 10% in equities, 10% in indices, and 5% in commodities. So the FX space really taking the brunt of what is going on fundamentally around the world. Now, looking at the money flow trends, this is the buy side versus sell side interest per asset class. These numbers are, I would say, slightly changed, but not significantly so. Indices at around 58% bought overall. Fixed income markets and commodities markets, there's not a damn thing to say about them. They are at 50-50 longs and shorts. Moving down into the equities and focus, Palantir Technologies is back on the cards yet again. This one's coming up for me quite a few times at the moment. It's a really interesting equity. They're doing really well. And yeah, there's just a lot of interest in them. A lot of interest. So definitely worth checking them out. We've got Riot over here at 69%. We got Plug at 56% and UPST at 66% in terms of buying interest. This is not fixed liquidity numbers. This is interest. Now, my spotlight equity of the week this week is actually SoFi Technologies. And there's a lot of decent things about the setup at the moment that I really liked. I've expressed some of my thoughts down here. Please feel free to go in and have a read of that. And then finally, we've got the institutional buying interest by sector. Technology takes back the first place. Energy now moves down into second place, with financials and industrials down below. Now, of course, ladies and gents, the best part of the report, the information provided in this market analysis report, is for informational and educational purposes only and should not be considered as financial advice or a recommendation to trade or invest. Trading in financial markets involves a significant level of risk and may not be suitable for all investors. So please do your due diligence and don't take what I'm saying as the god of the markets, because I'm just not. I'm just not. But there we go. So lots of information for you all to get stuck into this week. An absolutely jam-packed market report for you to go through and read through all the the nitty-gritty stuff. If that's your thing, remember you can gain access to this for free. I reiterate, for free. I'm not going to try and open my coat and sell you my wares. I'm not that kind of guy. I've got, I'm not running a pop-up shop like that. You come in, you make your account for free on the UTC website. You can enter the trading community for free under a basic plan, and you can go to the UTC My Report channel and download your copy every single Monday for free. If you want more market insights, if you want that daily flexed out process of going through the portfolio, of having direct access to all of the portfolio's trading opportunities on a day-to-day basis, then of course that is there for you. But it's not going to be shoved down your throat. It is completely your choice. What I'm saying here is this is a top level piece of market insight that you can gain access to on a weekly basis, and it is for free. So I'll leave that there. Now, let's move on to our beloved charts and have a look at what's going on this afternoon in our US indices. So bear with me 2 moments and I will get that done. Let's have a look here. Okay, awesome. Right, so US indices today. Let's go over to start off at the US 30 Dow. We've got relatively unchanged data today. We're looking at around 0.25 to 0.3% across the board in daily change in our US indices this afternoon. They are looking pretty tired out. They're looking pretty weak. We had an absolutely enormous Thursday and Friday last week, and then it followed up over the Friday afternoon with relatively ranging price action, maybe a little bit of a small corrective there. But ultimately, yeah, it's looking pretty tired out. The NAS 100 and the S&P 500 respectively are looking a little bit different than the US 30 Dow Jones, which at the moment is looking extremely tired. But I do foresee decent trading opportunities across all three of them. So we're really going to have to narrow it down. Starting off with the Dow Jones, then we're currently trading at what I would deem as a really nice structural point in price action. This is an area where we ultimately have a lot of commercial interest taking place, a lot of buybacks taking place, a lot of sell-offs taking place, all originating from this one particular point in time. So I'm really liking it for that fact. Now, if I put that there, for example, and drag this down to the low, we've got a really solid trading margin, which I would instantly like to trade. This is where I would call the path of least resistance. So I'm going to have an entry at around 47.033. I'm going to target down here at around, let's say, 46.87. And then I'm going to have a stop loss, which is situated at about there. A nice little margin above that zone, just to allow for any potential wick throughs that come back up. And that's going to yield me a 1 to 2.64 risk reward ratio, which I'm really happy with. Now, on the flip side of that, of course, because there is a flip side, we've got this level up here. Now, I was looking at this one before. And again, we've got really nice commercial interest in here at the moment, really nice path of least resistance. And what I'd be thinking to myself is, okay, if we can get a breaker structure through like here, for example, we might be able to look at a long opportunity above where price is trading currently, target there, and the stop loss for this one would be about here, yielding a 1 to 2.54. So we've got a 1 to 2.64 down at the lows, and a 1 to 2.54 up at the highs. Really nice trading opportunities on both sides of the market. So we can download that one and consider that done. Now, looking at the NAS 100, instantly I see trading opportunity. Okay, instantly. If I look at the S&P, it's not as clear. We've got a little bit of room to go before we can get there. So I'm thinking to myself straight away here, the NAS 100 is looking like the more favorable trading setup for us at the moment. The one that requires the least work, let's say. So instantly, I'm really liking that level in there. I'm also instantly really liking this level in there. Now, I imagine some of you are saying to yourselves, hang on a minute, the previous low's here, so why are we targeting, this one slightly above? It's all about the game of probabilities. I want to be in and out of the market with the most likely chance of success. I want to be in and out with a win, not with a grinding chart that's going to take 6 to 8 hours to clear. And I just want to be done and dusted. Nice, quick, and easy. And this is the kind of thing that I will do. If I see a nice point of liquidity like this, instead of saying to myself, oh yeah, but I really like the bigger risk reward ratio, because if I take it down to there, I'm going to look at a potential 1 to 3 rather than a 1 to 2.5. That's a quick way to lose money in the markets. Okay, let me tell you, after 15 years, the thousands of people who I've helped along the way, that is a quick way to lose money, and it's something that is incredibly common as well in relatively newcomers to the markets. So what I'm looking at doing here is going for the most likely outcome, looking for that consistency to drive home those returns. So straight away, anyway, NAS 100 short, entry at around 24.89, targeting 24.66, stop loss up at 24.98. Really nice trade idea, very well balanced. It all makes sense. But then we have the flip side opportunity as well, of course, the one on the long. So we've got this area in here, which is a really nice structural point. We have a target profit, which again, same process as the short. I'm not going to go to that high up there. I'm actually going to go to this in here, which is below that previous high. And that is because of these levels in the past, which have been utilized here. Look at this point here. Huge inflection point. Market sells off. We gather liquidity, huge commercial interest takes place. Okay, so this is now a more likely outcome for me. If I were to take a long, there's more chance that the market reaches 25.18 than it does all the way up to 25.26. So I'm going to set up my long. That's going to be entry there, targeting here with a stop loss at about that level there. And that's yielding a giant 1 to 2.78. So a really, really nice risk reward ratio on that one at the same time. Now, just to clarify, these positions are not pre-market positions. These are post-opening bell positions only. Okay, market orders 0.25% per trade. Please stick to the risk parameters. They are there for a reason. They are the most crucial part of the trading process in order for us to make money and make as much money as we do for as long, and I say long, this should be emphasized, for as long as we do, for as long as we have, we stick to those risk parameters. Okay, and this is what we have as a result. So really, really nice trading opportunities on both sides of the market. Long, short availability, same as the Dow Jones. We're ready to rock and roll, team. We are ready to go. So what I'll do is I'll get those trading opportunities out to the trading community. You guys within the trading community within the next few minutes. We are at 2 p.m., which means we've got a half an hour now to buckle down, grab ourselves a coffee, grab ourselves a bite to eat before the markets kick off this afternoon. And let's see if we can get this week off to a good start. So listen, ladies and gentlemen, I'm going to be wrapping things up there. This is your market report breakdown session. I hope you've enjoyed the video as much as I have in creating it for you all. Wishing you a wonderful trading week ahead. We've got some big things planned here at the UTC, including, of course, the event that shall not be named before it takes place, coming up in a week's time or so, maybe like 5 or 6 days away. So please stay tuned for that as well. And remember, we've got the NFP session taking place as well on the Thursday. Now, of course, the live trading NFP event, so please don't miss that one. As I said, if you're on YouTube, there's lots of things going on here. Feel free to join in and take part. And yeah, have a great trading week, guys. So I'm going to love you and leave you there. Have an awesome day, and I'll catch you in the next one. Thanks, guys. Bye-bye.